This is like a, 10, 13-year window for number of properties for sale. So we have 1,790 properties for sale, and our population has skyrocketed since our inventory got gobbled up, and we're just starting to tick up. June, we saw 1,790 in terms of number of listings, about 1,000 listings in June last year, and we're up 75%. So there's just more properties on the market. And in turn, prices have come down. Median sale price for detached is down 100,000 from June last year. Now, deal hunters, you that are thinking, maybe I should start looking at Waterloo region, or I'm definitely looking in Waterloo region and I want to know what deals there are. These are the deals that we're actually seeing people be able to like pull off. Now,
all right, everybody, welcome back to the Canadian Real Estate Channel. I'm Adam JD Martin, your host, and today I'm here with Zack Brittain from Phipps Brittain Real Estate. We're looking at the summer stats update for Kitchener-Waterloo. Zack, what's going on? Let's do a deep dive into this.
Dude, but before we even get into the real estate, man, I need a personal update. If we took a month off, my spring was crazy. I was working on a bunch of big personal deals. I sold my first property that I ever bought. Oh, didn't realize it'd be so emotional. That was the one I've talked about it before. That was actually the first property that we did, but that one is actually like the reason I became a millionaire in the first place. I did one deal. I didn't make just $1 million from that, but it was the one that kind of like refinanced, went and did a couple other flips, went and did a couple other burrs. And then I look back and I was like, holy shit, I did that one deal and it let me do all the next 5, 10 deals. And so let that one go, which kind of sucked, but started to really play real life Monopoly. I'm going to talk about it later in the video, how we're trading some of our smaller properties and moving into some bigger ones. But like, man, I started running again. I got a 28K race. I got people that watch the YouTube and, they check us out on Instagram and stuff. And they're messaging more about my running and my donuts than about real estate. And so I'm still eating the donuts. I'm getting the running going. I did a lot of personal stuff with family. We visited Canmore. But I had a lot of support from the people checking us out on YouTube, and it'd been a while, and I hadn't had a chance to talk to you and catch up with you. So that's what's going on in the life of Zack. But we got a weird real estate market in Waterloo region. We have a lot of changes with the city. We've reported on the city changes, the opening up for development and redevelopment. There's more changes coming to some landlord and tenant rules, and we're going to update people on that in a couple of months. We've had some conversations with city representatives. The dust hasn't quite settled yet, though. So people do have questions on the 4 units on one lot, the major transit areas, the changes to rent evictions here in Waterloo region, or specifically here in Kitchener. Like, send me a message if you have a specific case. But we will share more information kind of when the dust has settled on those. I was actually in the city of Kitchener market today, and they have outreach programs there on Saturday mornings about like redevelopment, the big towers where they're going up, like lots. And the booth that they have there is packed every time I see it. So if you guys are local, the Kitchener market has that every Saturday morning, and they typically have like an outreach program either there or at community centers. And I know a lot of clients of ours, a lot of people that we haven't met will go to one of those and then reach out to us and ask kind of questions about our experience. So if any of you locals are there, let me know how the experience is. Let me know how the city of Kitchener is responding to these types of things. Because I'm hearing some mixed reviews. So if any city of Kitchener reps are watching, though, thank you. You've been very good to us. We appreciate you.
Yeah, well, what a great place to go and not only get some information, but have a chance to network with other investors or service providers like realtors like yourself. Like, that's a fantastic way to get out in the community and just meet people, right? As well as figure out what's going on. That's fantastic.
Yeah, like even a lot of locals, like within 2 or 3 blocks of us that know I'm in the business, if they got kids or if they've seen us kind of around, we've had some conversations, like lots of conversations specifically in downtown about ADUs or about adding an addition for parents or grandparents. Those trends will continue. We talked about it here. Other markets, Barrie, Oshawa, like a lot of those guys are looking at stuff like that because the cities just aren't growing quick enough. So if people have questions on those, by all means, let us know. But for the purpose of those of you that are either already invested or interested in learning more about Waterloo region and what the market status is, we'll go through some stats real quick now, Adam. I'll go through these stats real quick, but I want to go to a couple charts that I think tell a little bit more of the whole picture. I want to remind people as we go through these, though, this is a snapshot. When you're looking at data in real estate, like real estate markets move fast but slow, if that makes any sense. Changes and shifts in sentiment and perception change pretty quickly, but it takes months and months and months for the data to actually reflect what's going on. So just if you guys are doing a deep dive on stats, just keep that in the back of your mind. This is just some information. So I'll pull up the numbers here real quick. June, we saw 1790 in terms of number of listings. So we had just over 1,000 last year, about 1,000 listings in June last year, and we're up 75%. So there's just more properties on the market, just more properties on the market. And in turn, prices have come down. Median sale price for detached is down 100,000 from June last year, right? Yep. Now, that doesn't mean that every property is selling for 100 grand less now than it was last year. Just guys, take this into perspective. But this does mean that buyers are pricing in the best case scenario. They're pricing in the fact that there's more inventory and that they think there's more inventory coming. They're also pricing in the fact that interest rates have come down a little bit, but they haven't really come down a lot. So we're seeing buyers be really picky. What that means is the good stuff goes quick, bang. 12 days on market is the average days on market. That is so quick, quick. Typically, it's more than triple that. And so in a balanced market. So if you guys have no idea what's going on in real estate, there's more options available. Prices have come down. Interest rates haven't come down enough. So buyers are still super hesitant. That means that inventory is going to stack a little bit. Now, our spicy ratio, I'm sticking with the hot ones memes. DJ Khaled, he backed out. He couldn't handle the spice. A lot of buyers cannot handle the spice of competing for listings. So they're just saying, hey, I don't want to compete. I will go offer on something else that doesn't have multiple offers. Or, you know what, I'll wait and see if that listing does actually sell with the offers they got. And if not, then maybe I'll come back to it. And that just shows that buyers are hesitating. And if buyers are hesitating, they're waiting to figure out which direction the market goes before they make their decision. Make sense?
Yeah, no, that completely makes sense. And it is interesting too to note that the spicy ratio is still up at 102% with that big of a drop in median sales price and that big of an increase in listings. So with all stats, I think you touched on this really well. Like there's just more to the story than simply looking at any one of these numbers in a vacuum and saying, oh man, there's 75% more on the market, right? Like there's just more to it. And all of these factors are related, and there's a lot more we can talk about. And I think these future charts here, there's a huge story here, right? So let's unpack this story because I think this is really fascinating for the viewers.
And on that note, this isn't a vacuum. Like real estate is very much a case by case basis. Very much. Look, unless you're in a brand new condo building or you're in a brand new subdivision where multiple properties have been listed and sold and they're all very similar. Like there's so many nuances and differences property to property, street to street, neighborhood to neighborhood. So like just understand that this doesn't mean that no properties are selling. This doesn't mean that buyers are, pillaging and taking advantage of every single seller and every property selling hundreds of thousands below asking price. That's not the case. This is a 5-year median sale price chart. I want people to look at what happened at the beginning of 2021, the end of 2020. You have a massive spike. I'm just looking at the red line. That's just single family, right? You have a massive jump in value. You jump over 100 grand in a month or two in median sale price. And then it wavers a little bit. And then you see that big spike. That spike lasted a month and then it went straight down for 5 months. So what you see the last year and what you see going from 2019 to 2020 is much more healthy than what we saw between 2020 and let's say 2023. We expect a little bit of up and down. Spring market, you see prices come up, and then summer, you see them depress a little bit, and then you might see a little bump up in the fall. That's much more common. But Adam, me and you have talked about it off camera, but also on our videos is you're seeing multiple % changes month to month in median sale price. Guys, that's insane.
panic. Yeah, you should not be looking for that.
It's aggressive. It is
Yeah.
aggressive. So this, I just want to give people perspective on like, hey, we're pretty much where we were after we saw the original massive drop from our all-time highs. We're pretty
Yeah,
close, ladies and gentlemen.
and if you just mentally trace a trend line onto this chart, like just drop what you think is the average kind of onto this chart, we're right on track. I mean, this is like perfect,
Yeah,
really. And that spike there should just honestly be excluded from any data, and it should be
please.
excluded from any investor's mindset. You should never
Yes.
expect to see that again, and you should never hope for that. That's not an investment strategy. That's timing. And
Yep.
some people probably did well, and some people would have lost as well in that process. But like, that's not reality in terms of like how we should look at these stats. These stats are perfectly normal if we just look at like a trend line placed on here, excluding that big spike.
If you took out the top 5% and the bottom 5% in terms of highest shifts and lowest shifts, it would just be so much more acceptable in terms of what we could expect moving forward. So
Absolutely.
here's the really important one though, is
Interesting.
I talked about in our last video just how fragmented our market is.
Yeah.
And the green line is the condo market. We have 100% more inventory year over year for the condo market. We have skyrocketed.
Yeah.
Any guesses as to why, Adam?
To be honest with you, like I think we've talked in the past about there being older inventory being somewhat priced at the similar prices to new inventory coming on. That's one, I guess, like thought that I have.
Yep.
Another thought that I have is like it's just a different type of ownership having single families, and we also have like the addition of like your ADUs in your market now and the ability to add additional units to existing properties. So like, yeah, there's just so many reasons I think why single family properties are becoming more rare, and so are therefore more sought after, and so there should be less sitting around. But we're also just not building a lot. Like there's just not a lot of single families being built, right? So that, you know, that's just a consequence of the density that's required to operate these cities with this type of influx and growth. So yeah, those are some of my thoughts anyways. What have you got?
No, that's bang on. But more specifically to Waterloo region is any locals that have been here for say 10, maybe even 20 years, is 20 years ago, condos weren't a thing. 20 years ago, you could go buy a home for an extremely reasonable price compared to the median income. And the city wasn't busy. We didn't have the LRT, right? University of Waterloo and University of Laurier and Conestoga were growing, but weren't gangbusters. And so there wasn't a need to intensify living. And it was still affordable for developers and builders to just go build single family homes, semi-detached and townhouse complexes. So that's what they were building. Now, the last 10 years, we've had to redevelop a lot of the, let's say, less desirable areas and a lot of the areas that are close to your hospitals, your schools, and your major transit stations. And there was an influx of development in that space. And there's going to continue to be. But people need to remember the condo market is much more susceptible to larger shifts because it is a less desirable asset compared to other real estate assets. Because there is only one thing that you can do with a condo. You can live in it, or you can rent it out to one person. And if you're renting it out to one person, or if you're living in it, that's all you can do. I can't add units to it. I can't add bedrooms to it. I have limited amount of space. I can't move the location. Like, they are great. They can be awesome investments, but you will see, let's say, demand and an interest from investors and investment from investors leave the condo market quicker than any other market segment. It is
and if you want
speculation.
And if you want a crystal ball on this too, like I've watched this time and time again, watch Toronto. You can watch downtown Toronto condos are the harbinger for what's going to happen everywhere else near the GTA, up to and including KWC. Like you watch downtown condos and they'll do something, whether that's go up or they'll go down. And then you watch every other submarket respond to that fact. And it's not the stats affecting the other stats. It's just consumer behavior, and it's everywhere throughout our markets. And taking a macro approach to it like that is much smarter to how we.
And listen, I've been very clear. Like my experience, I'm typically, so me and Matt, we're a team, we're a duo. I'm the condo expert of the two of us. I do a lot of those deals. I have a lot of experience in them. We have clients that have done very well with condos in terms of an investment, but they're just more volatile because the demands for them can fluctuate so dramatically with investors' appetite for this asset class. And so I expect those to continue to develop and come to market. And long term, there will be good opportunities in that space. But right now, condos are getting smashed. We've helped clients offload a couple condos because they were realistic and aggressive with pricing and marketing strategies. A lot of them aren't selling because they have brand new developments that are going to be comparable prices to properties that are 2 to 5 years old and have tenants living in them or are vacant and don't show as well, and so on and so forth. So to summarize this real quick, the overall property types market supply is a little skewed with how aggressive those condos have come to
Yeah.
market. You're still less than 3 months single family, but overall, buyers, investors, you have more options than you have ever had in over 10 years in Waterloo region. So use that to your advantage. Start shopping, start analyzing deals, start getting really specific and really picky, and just go deep on your purchasing and your analysis. And a good deal will fall into your lap because there's more good deals. I shouldn't say more good deals. There's more just straight up opportunities flying
Yeah.
around. More opportunities, better chances to find better deals. Straight up.
Well,
Now,
and we know this from watching YouTube. Sorry to cut you off there, but we know this from the YouTube comments and seeing YouTube across the various markets. Everybody for the last few years now have been complaining about how ridiculous prices have been, right? Prices are too high. It's impossible to find a deal.
yep.
This is ridiculous. Where do we get anything? Months of supply is too low. Days on market's too low. The spicy ratio is too high. And all of those seem like problems, right? But this is why I tattooed problems or profits to myself as a reminder that when we see the market responding like this, you're going to hear things like doom and gloom. You're going to hear people saying like, oh my God, and actually a stat you pointed out there, right? This is the most inventory we've had in 10 years, a whole decade. So some people are going to see that as a problem. And there's going to be a lot of people out there like ourselves that are going to see that as an opportunity. So before the comments torch us, because there's going to be one comment at least that says like, this is crazy. You told us to buy here, whatever. Guys, look at the macro, right? And think about your strategy, think about your goals and how these opportunities can serve your goals. It has nothing to do with where we're at in a market cycle. This just means you have more choice now and more opportunity to put out offers. And that was always our golden standards. Like, how many offers have you been making? Because right now,
Yep.
all that inventory sitting there, why are they sitting there? They need to sell for a purpose, right? So go and make offers and make them creative. This is the same problem in a different situation of when we were making millions of offers in the high markets, when the market was super hot. This is the same thing, except now you have more flexibility. So take advantage of it.
Yep. Yeah. And on that note, as I think it's really important for people to consider their goals. You mentioned it too, but just like, let me bring that back. If your goal is to buy one investment property and it has to be the perfect investment property, well, the scenario to create that is so much harder than if
Yeah.
your goal is to buy a good deal because you're planning on buying multiple deals over the next 10 or 20 years.
Yep.
Like, you're never going to find the perfect deal. It doesn't exist. It
Yeah.
doesn't exist. Even that
Well, you
first duplex I
mentioned,
mentioned.
yeah, I was just going to bring that up. You mentioned your first deal. Was it the perfect deal when you bought it? I highly doubt it because you wouldn't
It was a
have had
cat
the
pee
money.
house, Adam.
Yeah.
It was a
Yeah.
complete shithole that we renovated top to bottom. I spent
Yeah.
every dime and every minute of spare time I had for a year almost to pull
Yeah.
that off. Well, looking back now, it was the perfect freaking deal. But at the time, you're like, this is just a
Yes.
good deal and I need to live somewhere. So, like, this is all I can afford. I'm going to do it. So, if your goal is to buy the perfect deal, I'm sorry, I'm probably not your guy. I can't find a perfect deal. It doesn't exist.
Yeah.
But if your goal is to make a good investment, given all the information you have with a long-term plan, call us. We are your
Oh.
guys because the mindset of, okay, I need to make something that makes sense now and will help me reach my long-term goals with as little risk as possible. Okay, welcome to real estate investing, guys. You're at the dance. Let's dance. But
Yeah.
for the investors out there that like I'm buying in every market. I'm selling in every market. I'm an active investor in the sense of I'm going out and
Yeah.
looking at deals, offering on them, and I'm looking at my portfolio critically every couple months, being like, hey, should I move on from this property? And we'll talk about that later. I want to wrap this section up real
Yeah.
quick,
Let's
just
pull
like
back those stats up.
this is like a, 10, 13-year window for number of properties for sale. So we have 1,790 properties for sale, and our population has skyrocketed since
Yeah, that's wild.
2014. So we have
That's a
way more
really
people
crazy
here,
stat.
right? I'll have to flip up population data on our next video, but our population has skyrocketed since our inventory got gobbled up, and we're just starting to tick up. So I'm looking at this as like, hey, and we've actually had two investors pick up deals in the last 2 weeks, and they've been on the sidelines, but they're thinking, hey, You know, you can never time that bottom. You can never time that bottom. But if I can get a fair deal now, and interest rates are probably going to start coming down a little bit more in the next couple of years, and they're not building any more this year than they did last year. All right, demand will gobble this up. It is just a matter of time. And we share a similar mindset. So if you guys want more stats and more data on this, we share a lot of this on our investor hot list, weekly email. There's a link in the description. I'm going to put that up at the end of the slides as well. But just for you guys, if you want the Waterloo region stuff more consistently, get on the investor hot list. If not, subscribe to the YouTube channel. Come watch us every month. We go through it there too. All right. Now, deal hunters, deal hunters, you that are thinking, maybe I should start looking at Waterloo region, or I'm definitely looking at Waterloo region and I want to know what deals there are. These are the deals that we're actually seeing people be able to like pull off. Now, listen, they all come with a little bit of an asterisk at them. It has to make sense for them. It has to be the right investment for their capacity as an investor, but also the returns and their long-term goal. But like duplex conversions, for you newer investors out there, this is a great way to figure out how you fit in as an investor. Do you want to do the work? Do you want to pay somebody to do it all? Do you want to GC it? Are you going to be the one doing the work yourself because you can't afford to pay somebody, or you think you can do it better or cheaper? But the reality is duplex conversions give you multiple options. I put it right underneath there, multiple options. You can live in it. You can rent out both units. You can flip it and sell it, right? You can do a lot of different, you can refinance it. Like you can do a lot of different things with duplex conversions, and you don't have $500K to $1 million cash into the deal. So for you guys out there that are thinking, hey, you know, I have a little bit of experience in real estate, or I want to start making real estate a part of my long-term wealth generating portfolio, these numbers can still work in Waterloo region. Look, they aren't as sexy as they were 10 years ago. Nothing is, but better to go to the dance late than to miss it at all. So these ones we also like because they also have future potential to add value, because specifically in Kitchener, you can do the 4 units on one lot. So you can buy something now, refinance it within the first 3 to 5 years, because we're expecting interest rates to fall within that window. If interest rates fall, Adam, prices and asset values can start to rise. You can scoop out some equity. All right, you know, spend that on your own stuff, or go buy new investment property, or use that equity to go add more units on your existing property. Options. The reason this is such a good deal is even if it break even or cash flow a few $100 a month, which they do, you have options. And as a newer investor, options is so important. If you have 20 properties, you don't need options for every single one of them necessarily.
Yeah.
But if you only have 1 or 2, options are key.
Yeah, I can't stress that enough. I think the most dangerous place as an investor to be is like that kind of 1 to 5 properties zone, where like any one of them not functioning properly is really difficult. So the more options you have, certainly
100%.
the better.
And absolutely. And you know what? I felt that when I'm starting to build my portfolio, right? You only got a couple in the portfolio, and shit, one tenant's not going to pay you, and then they're going to damage the property, and then they move out. You feel that a lot more. But we're going to get on how we're scaling beyond that and why that's making sense for a lot of investors that are sticking around here in Ontario. We're going to finish up with that. Other deals, like I've said it on almost every video I think we've started since we started on the Canadian Real Estate Channel, was house hacks. Guys, you're a single individual, or you guys are a young couple, or you're really savvy and you want to get started and you want to live cheap and you want options. Again, options. House hacking. There was 48 properties in Waterloo region that these are freehold, semis, towns, or detached, that sold for under 600 grand in the last 2 months. We just firmed up on a legal duplex for a client under 600. He's going to cash flow 1,200 a month on that thing.
That's awesome.
Simple, no permits, and then multiple options for a house hack. Live in, flip, fix it up as you go. You know, you and your buddies are just graduating university, scrape some cash together, go buy a house together, rent out any of your spare rooms to your other friends that aren't going to get in on the deal. You're a young couple, rent it out to colleagues, family members, friends, or get a long-term tenant that lives in one side of it or the other. Like, I get it. People don't want to share living space. They want their privacy. But if you want a pathway to getting into real estate investing and building wealth without going super crazy and going buying multi-million-dollar properties, don't sleep on house hacking. Grow up, get a good freaking deal, rent it out, make some cash, learn about what you like and you don't like in real estate, build some equity. You'll thank me later. Please, please, please. If you're thinking about doing it, give it some real consideration. It is so powerful.
Yeah. Single-handedly the best financial decision I ever made.
Was it you? I think it was like a triplex and you lived in one unit and rented out the other. Was that the
Yeah,
play?
actually, it was a semi. So you can do this with all types of properties. You can do it with duplexes, triplexes. You can do it with a single family. I managed to do it with a semi-detached house. And what I did is I just put like a little kitchenette thing in the basement, and then I started out with renting it to students. We tried out Airbnb as private rooms when Airbnb was super hot, and like we were
Yep.
averaging like $1,000, $1,200 a month in cash flow from our house that we were living in for free. So that was like really,
12
really
grand a year is a ton of
exciting.
money to the average Canadian. Like,
Yeah.
guys,
Yeah. And
it
that's
is
after
so
living for
powerful.
free. So deduct like basically add on to that the 2000 or whatever you might be spending for that same space for you to live in it, right? That's a meaningful difference in the money you require to live, right? That eliminates
Yeah.
so much of your cost of living.
I've done the math on um, moving from renting into purchasing, doing a duplex conversion or doing a house hack. You're living for it's typically within $300 a month difference, either
Yeah.
plus or minus, but you own a property.
Well, the potential upside there is outrageous, right? When you see those charts and you just saw the prices elevate $100,000 in a month, that's the type of exposure you have. Now, at the same time, it can go down, but but that's part of risk, right? And realistically, risk is realized when you sell, not when you hold it. So if you can maintain your properties by having cash flow, by actually having rent and supplementing it with your income potentially, then you can hold that property until the cycle makes the most sense for you. It's not about timing the market, right? It's about being able to hold the properties until it makes the most sense for you to sell it.
Yeah, I'm like a stupid simple guy. Don't get me wrong. I have a fancy degree. I don't really use it that much, but I got it. Truthfully, but I like stupid simple. I don't know too many broke guys that have owned real estate for 20 years.
I don't know
I
any.
don't. I don't know anybody. Show me if somebody who's held a piece of property for at least 20 years. I guarantee they're loaded.
Yeah. Yeah, they're fine.
Just hold it. Just hold it,
Yeah.
right? And this is coming from, I get paid to sell properties. I want everybody to hire me to sell all their properties. That's how I
Yeah.
get paid. But like as a real estate investor, guys. Okay, last thing on some deals here in Kitchener-Waterloo. Single family homes, duplexes or triplexes, you can build an ADU on in Kitchener. If you're within major transit areas, which I'll cover real quick, you get a little bit more relaxed in terms of regulations or how stiff the planning and inspections are going to be. Typically a little bit easier to get minor variances for any frontage requirements or parking requirements typically, hint, hint, nudge, nudge. But your ADU can have 2 units. We have a model for that. So if you guys want to know what that looks like, we also have a client that's building a sick one, except they're building it, it's their retirement. Mom and dad, or grandma and grandpa are moving out of the house, their kids, and then their grandkids are moving into their original house, and grandma and grandpa are building an ADU in the backyard. And they're like, yeah, we want one with a basement. And we're like, man, like, okay, right? They're gonna use it as their pool room. Grandpa's gonna put his man cave down there and put his pool room down there. They got a little den and a bathroom, and then just big open pool games room. I was like, these guys are
That's awesome.
legends. Yeah.
Yeah.
So I mean, you can build them with two separate units, legal, right, and rent them out. The cash flow can be nasty, but also we're starting to see a lot more infill projects taking a single family lot and doing semi duplexes and semi triplexes.
Mm.
Also, seen some stuff for semi quads. So
Interesting.
if you can do semi triplexes, if I can but get, typically you need closer to 60 frontage here in Kitchener. I can smash
Mm.
down an old house, go build a semi triplex. Those numbers actually look pretty good. You can make some money on those bad boys if you can build them cheap enough and if you don't overpay for the lot. But if you can do semi triplexes, you're definitely in the green. If you can do semi quads,
Yeah.
big time jump in profitability. Rare, tricky, but the numbers look really sexy. So we've taken a look at a few lots. We've done some case studies. We have some properties of our own that we're getting some design concepts and running through permits for the city of Kitchener. So you guys have those projects on the go, or you're considering options for lots you own or want to acquire, send us a message. It's starting to get a little, you see a couple a year come through on the market or that you drive by and you're like, oh, I didn't see that last year. So those will start to become a little bit more popular, especially as prices have come down a little bit, because they will take years to actually develop, typically from time of acquisition to building and closing. So eyes out for those guys. There's a few neighborhoods that are really good for those. If you're interested in those types of deals, send me a message. And I'm gonna do this real quick.
The map.
Major transit station areas, LRT. I'm going to say it every freaking video we're on here, Adam. The region of Waterloo specifically said we are growing along the LRT stops. If you're within 500 to 800 meters of any one of these LRT stops, you get very preferential treatment in terms of options to develop or redevelop. These are going to be areas that are likely going to appreciate above and beyond market average. Plain and simple. These are going to become the most desirable locations in Waterloo region because they're going to see above average appreciation and they're going to have proximity to amenities and transportation. I'm not going to talk about it anymore. No questions. Don't ask me anything. If you have properties in this area, email me. No obligations. If you have questions about what we would suggest in terms of max value, if you want evaluations, if you want to get connected with builders or developers, if you want to develop it in the future and you want our opinion, or if you just want to sell it and get the max price for it, contact me. But strongly recommend investors out there take a good look at these areas if you haven't already. And I realize this is just causing more competition for myself because I like a lot of opportunities in these areas, but I got to say it. You guys are loyal to me. I got lots of love for the people coming from the Canadian Real Estate Channel. You guys deserve the good stuff. If you have questions in this area, email me directly right there.
Boom.
Now for the fun stuff. This is the fun stuff for me, Adam. I hated Monopoly growing up because I sucked at it and I didn't have the patience for it. And it takes 3 hours to play a freaking game. And anytime you land on somebody's hotel, you actually just want to throw everything, right?
Yeah.
But Monopoly is real. And what I mean by that is my partner, Matt, and I, we bought a duplex 4 years ago. 4 years ago. We updated one of the units in that 4 years after a tenant moved out. We just sold it and we used the proceeds from that to go buy a 30 plus unit building in Southern Ontario.
Boom.
Boom.
That's a big deal.
Boom. Guys, do not sleep on the power of holding onto a property. Listen, I wish I held that property forever. I loved that property. It was awesome. We were making fat cash flow on it every month, but we were able to roll the equity that we had into that into a significantly larger and more profitable investment. It's a big jump. Going from 2 units to 30 plus is a big jump, but we have been working on those types of deals for years now. And we were able finally to find one that fit what we were looking for, right price, right time, right seller, boom. So the reason we moved on to that was we really started looking critically at our return on equity. So listen, guys, if you're looking to start and scale your portfolio, getting a couple of these 2-3 unit properties or even a duplex conversion, even a house hack, a couple of those under your belt, you're a good little soldier. You could just slowly pay those off and you're retiring 10, 20 years. Guys, good for you. But if you want to accelerate your growth, or if you want to get into generational wealth, the larger deals are legitimate vehicles to do that. It is like what you're doing, but on steroids. So what we did was we took a really critical look at our return on equity. We had tons of equity tied up in properties because the asset values had come up so quick, Adam. And we really considered what's our goals. And eventually our goal is to live off the cash flow from our properties. And so we knew, but we did the math again and realized the amount of 2, 3, and 4 unit properties and how long it would take to get those in a position where they're making us tens of thousands every month to live off of is going to be a long time for what we wanted. And so our goal was within the next 5 to 10 years to be in a position where we're replacing our income strictly with cash flow from properties. And all roads kind of led to those multifamily assets. So if you investors are out there, I've had some people reach out for portfolio analysis or, do an equity report on some of their holdings, maybe make some projections up for what we think is going to be happening in the real estate market given the current circumstances. If you guys have questions like that, no obligation, shoot us an email, right? Those will help give you more information and clarity on what the best decision is for you. But for us, Adam, it was the return on equity. If I got 400K in equity in a property, well, if I put that into a multifamily asset, I'm probably going to double that at least in 5 years.
Yeah.
But if I keep that in my duplex, is my duplex going to double in value in 5 years? Probably not.
Yeah, there's a ceiling, right, on certain asset classes. So that absolutely makes sense. Yeah.
So what we were looking at was, okay, if we just played the equity game, let's say we take all of our equity, we put it in a pile, and we're doubling it in 5 years. Is that going to put us closer to our goal? Well, yeah. Okay, well, what if I put it in something that would triple in 5 years or 4x in 5 years? And you're thinking, Zach, if you could 4x your money or 3x your money in 5 years, show me the way.
Yeah.
Multifamily. Larger multifamily deals are the way. And the primary reason is, guys, one, straight up numbers are just better. Your cap rates, your cash on cash are just better. You can
Yep.
afford to pay somebody to manage the property for you as well, because there's going to be more cash flow. The financing, if you're going to eventually roll it in or you're going to close on it in a financing, there's debt coverage ratios that mean you have to cash flow or they won't give you the freaking loan for it. And you can scale because I can pay somebody to manage that property for me. I'm not spending my time managing it. I'm spending my time finding the next freaking deal.
Yeah.
And I can scale because financing doesn't matter for how much money I make and I show on paper. It's how much money the building makes. People, the amount of investors I've talked to that just don't understand this concept blows my mind. So I'll say it again, Adam, for everybody that skipped over that part. If you get anything from this video and you don't know this already, this is it. Commercial lending for multifamily assets is based on how much the building makes, not your own personal income. So I can get an infinite amount of loans from lenders so long as I find properties that meet their debt coverage ratio and cash flow.
Yeah. Yeah. I mean, it's literally the key. Like, it's the answer. And I think the path there, you're right, all roads lead here. And the reason it's a road is because I think those training wheels and things that help you learn the skills you need on a duplex, those are the same exact skills that you'll need for these larger properties. It's just learning on the duplex is so much more accessible. And when you make mistakes, they can be expensive, but they're really valuable pieces of tuition that allow you to be able to execute on a multifamily deal like this. And like, I'm with you on this too. Like the 24 unit building that I got, it's like the best thing that ever happened because it's just so much easier to manage. It's so much easier to grow and scale. And it's so much more reliable in terms of the financing, because any given time, your personal financing can be crazy. Like if you buy a vehicle or you've got too many loans out at any given time, like they hate your personal finances, but commercial lending on properties is very straightforward. It's what is the income? What is the expenses?
Math.
Right.
It is
and
math.
you can control both of those things, by the way. You can reduce expenses and you can increase income, and increasing the income increases the value, which gives you a bigger loan, which gives you more leverage, which gives you more scalability. It's just, it all lines up and all actually does lead to multifamily. So,
and it's awesome.
And what a story, right? This is two guys who started with terrible properties, literally terrible, and probably the last pennies that we had. And even more so for me, like I don't know about your position, but when I bought that first property, I begged, borrowed, and stole every penny I had to get it. And then, you know, here we are, right? And they were not perfect properties. They were pretty miserable properties. And we just turned them into opportunities through just effort, right? And that effort compounded over time is what gets you the scalability required to get into these multifamily deals.
It's so true. And on a personal note, you know, we kind of had an idea of how this was going to go, and now that we're actually executing, it's kind of crazy how closely those kind of two stories mimicked. It's like I've watched and listened to tons of people, yourself included. They're like, yeah, did a bunch of really shitty, cheap deals because it's all I could freaking afford. You could muscle your way to $1 million or 2 million in equity or net worth in real estate in residential. That's what we did. But you reach a point where financing is capped, time and energy is also capped, and capital is also capped.
That's the big ones. I think the financing problem can be solved. And so a lot of people bark up that tree, but it's the wrong tree. It's literally the energy problem. Like you have so much energy in a day and so much time, and you will consume a lot of it on the smaller deals.
Yep. And so we started focusing that energy on managing our current assets way better, positioning them to sell to maximize the amount of capital we could extract from them and roll those into the bigger deals. And so, you know, we love the 12 plus units. You know, value add's great, but honestly, just decent buy and holds in areas that aren't garbage. Guys, Southern Ontario is going to boom for the next 20 or 50 years.
Yeah.
I'm down to be a part of that. Right. So if people have questions on how we're moving into that space, they want to know how we get lots of questions on our corporate structure, finance. You can get 5% down with lenders on multifamily assets, guys. Like the possibilities are phenomenal. And I'm not discounting the smaller deals. I highly recommend, if you don't have a ton of experience in real estate and you want to make that your wealth generating vehicle, the smaller deals still make money. They still make tons of sense. You can still be multi-million, 10x millionaire doing those types of deals. You can. But I'm just saying, for us and our goals, we wanted to keep growing our equity base, but slowly inch up our monthly cash flow So we could focus more on what was important to growing our portfolio and our net worth long term without having to worry about where the paycheck to pay the mortgage and the groceries was going to come from. My multifamily assets will take care of that and then some. And this asset class has really opened up that as a possibility. So no obligation, any questions or concerns. If you guys want, we share on-market and off-market deals on the investor hot list. I also share market stats. I also share links to clips of videos like this if I think there's some really good stuff on there. And if we have any other specific data for Waterloo region or deals that we're looking at, this is a great way to stay in touch. If you guys want to know what's going on in the world of Zack, you want to know what's going on with Waterloo region real estate, we are starting to get a little bit more off-market inventory from ourselves and from our investors who are making moves to either move up or that are at the end of their career and are cashing out and getting ready for retirement. So don't hesitate to reach out for what inventory we have. And if you're looking to move an asset, a lot of sellers don't love selling their investment properties on market. It is a colossal pain in the butt in terms of dealing with your tenants. You don't want to spook them. You don't want to scare them. You want to keep everything moving smoothly. If you just want to throw a line in there and fish to see what you could get for your property, we have a lot of people that are exploring those options right now as the market's starting to shift because they're doing the exact same thing that we're doing. They're moving up into the bigger deals, whether they're partnering, whether they're working with the team, whether they're going to jump into themselves or they're going to move to a different market. A lot of people are figuring out what their current assets are worth so that they can scale up just like we are. So phippsbrittonrealestate.com/contact. There is going to be a link in the description. I'd love to connect with you guys. The summer is going to be awesome. We're helping a lot of people kind of get in a position on, hey, are we going to make a move before the end of the year? Or are we starting to set up even for 2025 after the interest rate kind of environment settles? So those conversations we'll start having more so here with Adam as well in the next YouTube video. But we're really excited about this deal that we're taking down. We're going to be closing before the end of the year. And once it's done deal, once she's closed, we'll do a case study here for you guys. We're happy to share more details on that.
That's great. Thanks, Zach. I really appreciate it. I love it every time when you come on because you always bring deals, you always bring real numbers, and you bring sort of speak truth to power here on the channel, right? There's a lot of craziness that goes on in the news cycles. And when people are talking about real estate, I think you can get emotionally out of hand, but I think we do a really good job here every time you come on of really just staying focused on what matters. And that's the reality, right? It's the stats. So thanks so much again for sharing your story. And yeah, I absolutely love it. This whole channel is about real people doing real things. And I think today you've really highlighted that. So we're sticking to it.
Thank you, Adam. Thanks, guys.